Hi guys, how are you? Vladimir here, and this is the weekly forecast for the week starting on 6th of August until the 11th of August 2017. Last week was as expected, kind of quite on its beginning, ranging, zigzagging on the majority of the pairs, not all of course, and right after the NFP the trigger changed and a lot of movement started to happen. So I think it's good to go over them and build a plan for the coming week, because it seems like things are about to happen. So let's start. First of all, fundamental view. Our focus goes this week to inflation expectations in the New Zealand. That's gonna happen between the night between Sunday to Monday. Then Monday and Tuesday should be quiet. Wednesday is warming up with the official cash rate and the rate statement in New Zealand, press conference to follow. After that, manufacturing production in Britain and the PPI in the US. And Friday would be a very interesting one with the CPI and the core CPI, the main factor for the decision of the Fed to increase or not to increase the rates on the coming decisions. So, but before that, let's quickly take a look on what happened last Friday, and we can see that according to non-farm payrolls and the last data, this month was wonderful with above than 200,000 new jobs added to the market, and unemployment rate dropped to below 4.4, which is 4.3 now. Amazing numbers. Trump, of course, celebrating that, saying I just started all that. We all know that's not really Mr. Trump. That's all the previous decisions from previous president and the central bank. So that's kind of the trend following as for now. And that's what gave the dollar a bit of boost, which if you remember on the past weeks, we have been talking about it, and we said that the dollar would reach this exact area where it starts to gain strength again versus the majorities, versus the majors. I want you to have a look on that cycles, and we've been talking about that exactly, which gave us here false break, and we said we're gonna most likely face one more here, and that's exactly when it was leading us, and we are there right now. We just here around at the bottom. Amazing zone. And take a look what happens on the daily, how powerful it all becomes. And this is why the market is behaving like that. Okay, we are right around the 161, it's slightly below, that's fine. We are here on the next view, we are fully exposed to 261.8, see? And on that one we are kind of in triple, which is this big one, the bigger view. One, then this little triple 1, 2, 3, which is 2, correction in range, and 3. Amazing zone, doesn't matter how it turned around, affected right here with a wonderful engulfing. It looks good, it looks even great actually. And that gave us the understanding that the corrective cycle is coming, and it might happen already started from Friday. Let's go back to the majors. The euro dollar, we have been talking on that pair for a while. We started the follow-up from here when divergence was started, but as you remember, we said as long as there are no two false breaks and convergence, which means this, two false breaks and convergence for lower lows, as long as it didn't happen, stay long, right? And this is exactly what happened here. We extended the move to 117, 118. It even kissed the 119 and moving down. Now I want to show you some very interesting pattern happen on the daily chart. First of all, we have a beautiful engulfing here, this one. Now, very interesting thing is that was an inner candle, which now turns to be a false break by itself, as you can see. Classical condition, triple candle engulfing, looks just wonderful. So Now let's go over the lower time frames, and that's what I want to show you guys. Take a look. That's one false break, trendline false break. Okay, if we connect the highs, trendline false break. If we measure like this or like this, it gives us false break again. Second false break is right here on that highs between this area. Now the 4-hour chart, they are not technically correct, but since the daily chart is involved, 1-hour chart does provide us the false break principles. And that's exactly what we have right now. Again, another trendline false break, okay, and another high here closed as false break as well. So the bottom line is the euro dollar is great for sells, but what are the best setups to follow such sell? Basically, we have here a potential special cycle forming. So if the euro dollar can make one more push down, it's going to complete this triple or special cycle, doesn't matter how we name it around, which here most likely will create some kind of bullish divergence for us, start some kind of pullback, and that would be our area to look and sell this pair. Now if we take a look on the crystal ball, which gives us the levels, the amazing levels and the dates, take a look where it suggested this top to be created. Starting from the end of the month at 28 through the beginning of the month, which actually happened when? 2nd, right? So right there at the end of the month, the beginning of the month, that's where all these conditions started to form, and we got what we wanted to get. Now for shorts, that's still the last high on the 4-hour chart, but you can see that on lower time frames, it actually doesn't as for now, but it will start to trail that and give us the more relevant action zones and resistance levels to look for these sells. So from my point of view, if that's what's about to happen, like one more low, then we going back here to this area and probably want to be created here, and that's where we will be looking for the sells. Now, if it doesn't make that and just rallies, which in the current market conditions, summertime, could happen, then we are going all the way straight to most likely above 120, maybe even above 122, all the way to the 38.2 cycle of this 38.2 Fibonacci level of this cycle here. That's 124, 125. Extremely powerful zone. But again, as for now, as long as that situation holds, for me, it's if it creates that condition that we want, it will be sell rallies. That's my view for the euro dollar. Pound dollar, well, this one was a beast, right? It reached the 132 that we have been talking about for a while. For a long run, I still believe this pair is able to do the 136, but on the short run, this bounce is pretty impressive. It's triple cycle with divergence. There is a good chance we are going back to below 128 now. Now, why that all happens? During Thursday, the protocol of the voters of the rate decisions was published, and if on previous decision it was 6 versus the 3, now it's only versus 2. And sorry, that was 5 versus the 3, and this month now was 6 versus the 2, which means less supporters to the idea of hiking the rates. That immediately gave the bearish pressure for the pair, which completed. Take a look carefully what completed that for us. Again, guys, you see that one false break, 2 false breaks in a row, and we've been talking about that setups many times, right? That's where we got the boost, that's where we got the breakout, that's where we got the lower lows, and boom, the move down happens. So basically the best way to trade such scenario would be the same like with the euro. We got 1, 2, if we get 3 here, we will want to see the retrace and then massive sell to below 128. So we can say basically sell rallies once that completes itself is probably the best decision to do. Now this one also had 2 falls back on the 4-hour chart, now with convergence. So again, sell rallies. As long as this top holds, we are after sell rallies. Let's have a look on the crystal ball for levels. We have this, that's around 131. Same on the 1 hour chart. And same on the daily chart. Around 131 is extremely powerful if we actually reach this zone. So watch that beautifully for the pound dollar. Next one, New Zealandian dollar, another pair that looks wonderful and behaves wonderful. We have been talking about this one for a while now. Now this is what probably is happening. I believe from here we're gonna get some kind of 2 waves pullback, which should be broken after that and lead us for deeper correction. And that's the scenario I want to follow. Now note, we have the cash rate in New Zealand this week, so we must play here responsible and don't force the position. And let's continue. So that's for the New Zealandian dollar. The next one that's going to be on the list is the New Zealandian yen, which again follows the idea so far. We got a triple cycle here, 1, 2, 3. We want to see 2 waves pull back, so that could happen right now like this, 1, 2, and short, or it could actually extend it a bit further, so like this, 1, 2, 3, to around the 81.50, 81.30 zone, 81 maybe even. From there pull back to the middle, and second leg to follow. So keep an eye here, guys. It looks again wonderful, relevant, and technically correct. And of course, all that scenario is valid as long as this high around 84 holds. Next one, Aussie Kiwi, a pair that we are after longs. That did not change. It's a bit tricky situation here because we got one false break on the bottom, one potential on the top. So there is a technical chance that this pair now is building something like that, and from there buys. So what we do, every drop down we are after buys after that. By ideal, we're gonna get it around 106, maybe even a bit lower, before we are looking for buys to join the weekly and the monthly cycles. So keep an eye on that one, very, very interesting for sure. And we can continue with all the New Zealandian dollars, but the view here did not change. Euro Kiwi, Pound Kiwi, they remain exactly as we have been talking about for a while, and same with the New Zealandian CAD. Now this one is very, very interesting because if this one is able to give us the second correction towards the 85 zone here, this zone could be a monster zone for sell to join the bigger cycle, the monthly and the weekly range. So if we can get it here, the 095 zone or so, look for sells for another leg down. Okay, let's continue forward, guys. We have more interesting things. One of them is the Euro Franc. Remember, we said that this pair is suitable to reach even higher, like 116, 118. It was almost around 116, actually higher and further than 115. And now creating for us this extreme divergence with 2 false breaks, which are relevant here. One, and the second one happening right here live. We are building here this convergence principle, so we want to go and look to short that. As long as this top holds, we are after technical shorts. Only if this top will not hold, then the shorts become irrelevant and we are most likely going to the 118 zone. As long as this top holds, look for short and for corrective cycle of this special movement, basically like 113.50, 113 zone, maybe even further lower. Next on the list, Aussie versus the franc, still relevant, still holding this weird trend line which is broken and holding, and this resistance, and as long as it does hold the resistance of the 07720, stay short in the idea. If we break it higher and break above this high, it's time to reconsider, because there is a chance that we are just regaining the momentum to 080, 081. So be careful with that for those of you who are in, of course. Aussie dollar making the correction finally. Ideally, it should make it lower, so we will want to go long after that builds this opportunity. The best way to do that will be when we get the bullish hidden divergence followed by basic or regular one from the 4-hour chart. This combo is not there yet, therefore we don't trade it. But if we get that to the area we want, 0.78 or ideally even lower, bullish hidden divergence is what we want to see here, guys. So higher lows on the chart, lower lows on the MACD and stochastic by ideal, and looking for the buys right after that. Okay, now take a look on the levels and you will be able to understand what it happens from the 0.79 is first of all, but then we have the 0.78 zone right here. Okay, and as per days, it could, if it doesn't happen now, the next days only would be 12 and 13, so until then we might remain short. Euro versus the pound broke the range from last week and making the highs now. For us, the higher it goes, the better the sell is. No false breaks as for now, no shorts as for now. The only place where the false break happened was here. No second false break yet, and only if two false break happen and then followed by lower lows for convergence like this, like you can see on the chart right now, only then we can sell rallies. As long as it didn't happen, there is a good chance we are for new highs. Next one, dollar yen created a classical situation here. Beautiful convergence principle. No technical convergence by MACD, which means there is a chance that this is a range. The lower we go, and as long as we did not close below this low, the better this buy should be. So we are longs as long as we hold the lows and don't close below. We are trading this range here. That situation, okay, looking to rally to the middle. So after that one, for a longer run, once we rally, I will be looking for sales. But as for now, as long as the low holds and we don't have a close below it, we should follow this convergential principle and potentially turning into the range, which means lower prices, better buys versus the last bottoms. That's for the euro yen. Pound yen, it was a pair I was looking only for buys. We got two waves, so it was still paying nicely. But there is a good chance that this pair is now about to complete last leg into this triangle, which means there is a great chance we are going to get the pound yen to here and from there for long. So that's for 142, 140 zone. And if that happens, ooh, boy, oh boy, that should be amazing opportunity. So keep an eye on this one as well, guys. Cat franc, well, no real setup here, so we continue to follow exactly the same plans from the previous week. Nothing new, nothing changed. Gold and silver, now these two provided us what we wanted to see, top of the range and two false breaks here. One right here, two convergence, rally, move down. We will be again after buys only if we reach again the bottom of this range, or alternatively create somewhere in the middle a bullish hidden divergence hinting us for long. Then and only then we switch for buys. But for me, for longer run, it's only after buy. So two waves down followed by a bullish divergence, and we get the buy confirmation. Okay, now we reach the indices and the oil. I want to put some charts on the oil. We have some magnet zone there around the 52, and from my point of view, I stay only bullish here as long as nothing surprising happen. There is a magnet zone here around the 52, so for me it's bullish until that area. Make it very simple. S&P, Nasdaq, still nothing, still dancing in the same zone. And I showed it for one reason, not to say here we are to trade. I'm here to say here we are not to trade. But what I do want to pay attention to, guys, is that as long as the top holds, this is still potential topping range, which means getting ready for possible sells. How? We gotta move down. We got 2 waves retrace. All this retrace is stuck inside one candle movement, which makes it not really classical, not really beautiful, but for aggressive setup. If this is what's about to happen, lower lows, sell rallies. Aggressive, which means tiny risk, just to try to catch this movement. Because if that's about to happen, right from here, you got the edge, which means you get the best risk reward the market can provide, the market can offer. And it's too not logical to say no to that, because such opportunities happen regularly. So even if you are wrong here once, twice or thrice, once the move happens and you stick to the risk reward plan, huge risk reward. This is daily and weekly cycle. That's huge risk reward. We are talking here about 1 to 20, 1 to 30. So even if you're wrong once, twice, thrice, 4 times, 5 times, once this move happened technically, boy oh boy. But the most important thing, don't trade before you officially got the setup. Okay? Because it's too easy to get into the trap and too hard to get out of it. So that's what we are looking at, exactly as I showed on the chart. And that would be basically all, guys. That's for this week. Now you remember that we have few things from the past weeks, like CAD yen we are following and a few others. Have them on your list, follow them. The dollar CAD, another pair we've been talking about for a while and does a very nice move. There is a good chance it will continue because we don't have a divergence against form yet. So all that remains basically on. But for this one, for longer run, yeah, I will want to do this sell for sure. So very important to separate also the long-term and the short-term trading. That's all, guys. You have the watch list. You have the watch list from the previous week. Follow that. We can, as traders, make it easier by planning well. Because if you don't plan well, then once the week starts, you just trade everything, right? If you say, okay, that looks bullish, and then the week starts and few pips down, and you say, oh, that's bearish now. No, you have to prepare your entire plan and decide your decisions until when you are only short, until when you are only long. Why? And what should happen to invalidate your scenario? You very important not to try to prove the market that you are right or me. That's very, very important, because we cannot beat the market. We can just listen to it. And we can play safer. Like with the euro dollar. I've been playing to possibly go shorts from around 115 or even earlier. And we didn't get even one setup there with 2 false breaks and convergence. And if you remember my words, what did I say? We don't go sell before 2 false breaks and convergence happen. Until then, we remain longs. And that was same with the euro dollar, that was same with the euro franc and others. As long as it didn't happen, we are long. And you can see that this long actually paid very, very well, right? And that's, again, the importance to prepare your invalidation plan and activation plan when exactly your shorts become relevant and when not. Once you have it, then your follow-up of the plan is much easier. You don't have too much choices. They're not there. You don't have anything left for you. Just follow your plan. I am long as that happens. I'm short as long as that happens. Blah, blah, blah. Right? But you have clean plan. And you will not be disturbed by any noise at the beginning of the week. Because normally what happens is you write a plan, you prepare yourself, full list, and then as the week started, 15-20 pips against you, boom, Plan changed. Now I'm bearish, now I'm bullish, blah blah blah, whatever it is, and you forget about all you done. Sounds familiar, right? So don't do that, guys, and stay reliable and listen to your own levels and plans. Okay, it's very, very important. It's too easy to say, oh, now I change, or it doesn't work, or anything like that. Hold on. And if you follow the videos for several weeks now, you remember we've been talking about New Zealandian yen for 84.85. You saw where the short happened from? We've been talking for New Zealandian dollar 074 or 75 zone. The euro dollar, the 117, 118 zone potentially to start and build up the plan. Euro franc to cross above 113, potentially 115, 116. Pound dollar to 132 and then look for the potential setups. And so on. And so on. So again, we build the plan in advance, but there has to be something very, very specific to make you activate your plan. Okay? You go for a drive, you go for a journey, you choose yourself a direction, right? Like, okay, now I go on this highway, I turn here left, I turn here right, and I reach my destination. But once you are in, then you have clear plan. Because you know, if something happened and there is construction or traffic, you then have to go left or right and change your your directions, right? Same here in trading. Exactly. That's what I'm talking about. You have your plan, right? But you know exactly what's going to invalidate it. And you know exactly what's going to keep it valid. So as long as it goes smooth, nothing on the road, you continue with your plan. But if things change, the conditions change, you have to invalidate your plan. And this is how you do that. I gave you these examples, and it's very, very important you have that. Wait patiently. As long, if you, and I'm talking about here trading against the weekly chart, because trading with the weekly chart is much easier. Every drop down followed by bullish or bearish divergence in the direction of the weekly chart. As long as the weekly chart don't have any signs against you, go join the trend, easy. But go against the trend is much, 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 much harder. And here you have to be specific. Specific. 2 false breaks, convergence. If it didn't happen, don't be there. Even that not a guarantee for a successful call, but it is a guarantee for the best starting place. Remember that, my friend, it should help you a lot in your trading. So now, thank you very much for watching this video. I hope you enjoyed it. Your feedbacks and your comments are very, very valuable. Please, if you enjoyed this video, leave your comment and your feedback below. Click the like button. Share it with your friends, your community, with anyone you actually believe it could be helpful to. My goal is to help the community to get a correct read on the market. And no, I'm not saying I'm 100% right, but if you follow clean plans, on that we are the best. And that's what I want my community to know to do. It's all about getting the plan, because if your plan is A and nothing is happening like you want, that means you should not trade it, and that means no losing trades. How does that sound? So it's very, very important to know in advance what is your plan, what invalidates that, and what keeps that valid. Very, very important. So as I said, I hope you enjoyed this video, guys, and your feedback and your comments are very, very, very valuable. And if you have any question, please write it down and share that with anyone who you believe can have any good benefit and advantage by watching that. So thank you for your time. Enjoy your week, and I'll see you around. Yours, Vladimir Ribakov.